Hey everyone, welcome back to the InvestIQ podcast. If this is your first time tuning in, I'm excited to have you here. This podcast is all about sharing two key areas: personal finance skills and life experiences that I've picked up along the way. Today, we're diving back into the topic of Bitcoin. We're going to continue exploring whether it's a smart investment or not. In the previous episode, I covered blockchain technology, the core of Bitcoin and other cryptocurrencies. Now, there's a lot to unpack in today's episode, so I won't be repeating everything from the last one. But trust me, the knowledge from that episode is important, so I recommend you check it out before jumping into today's episode. Now, in today's episode, I'll be going deeper into the pros and cons of Bitcoin. I'll do my best to give you an unbiased, balanced perspective and share some honest insights about this digital asset. That said, keep in mind that these are just my personal views. My goal here isn't to persuade you to agree with me, but rather to give you multiple viewpoints so that you can draw your own conclusions and make the decisions that feel right for you. Let's get into it. So, here's how we're going to break down today's episode. I'll divide it into 3 parts, each focusing on a different phase of Bitcoin's journey. The first phase is when Bitcoin was created with the goal of being a payment tool to replace traditional fiat currency. However, as we'll discuss, that goal turned out to be pretty impractical, so Bitcoin shifted its focus. The second phase was when Bitcoin began to be seen as a store of value, much like gold. And finally, the third phase we'll cover is Bitcoin as an investment tool, and how people are using it in their portfolios today. Now, let's dive into the first goal Bitcoin had when it was created, the vision to replace fiat currency. For those of you who might not know, fiat currency is money that is issued by the government. It could be the dollar we use every day for buying and selling things. Initially, Bitcoin was created with the ambition to be a payment tool, something that could replace traditional money. So, let's take a step back and look at the current payment methods we have today. Back in the day, if you wanted to buy a loaf of bread, you might have handed over a $2 bill, right? Now, with the advancement of financial technology, we have payment methods like bank transfers, credit/debit cards, and even QR code payments through digital wallets. In essence, with bank transfers and digital wallets, we are still entrusting third parties, like banks or payment companies, to handle the transactions for us. Now, for Bitcoin to truly replace fiat currency in everyday transactions, we need to consider a few key factors. And here's the focus. I'm talking about its practical use, the ability to actually pay for things. To make this happen, Bitcoin has to meet some requirements. The first one is transaction speed. When you go to buy something now, whether it's a cup of coffee or a loaf of bread, if you pay by bank transfer or use a digital wallet, the payment happens almost instantly. The seller gets the money right away. When paying with a card, there's a tiny wait time, but it's almost the same. The transaction is completed within seconds. For example, if you've ever paid by card, you might notice that you'll have to wait just a bit before the machine confirms your payment. The time lag can be anywhere from a couple of seconds to 10, maybe even 20 seconds. Based on some data I've seen, the transaction processing speed of Visa is about 50,000 to 60,000 transactions per second, and MasterCard is a little lower, but still around several thousand per second. With those kinds of speeds, the process seems to be fairly fast, right? But here's the kicker. Bitcoin's current transaction speed is only about 7 transactions per second under optimal conditions. That's incredibly low compared to the tens of thousands that Visa or MasterCard can handle. In fact, when it comes to Bitcoin transactions, the fastest transfer might still take several minutes, and in less than ideal situations, it could even take several hours, depending on the status of the Bitcoin network at the time. So, just from the perspective of transaction speed, it's clear that Bitcoin is far from being an efficient tool for everyday payments. Let's talk about the transaction fees, another aspect where Bitcoin differs from traditional payment methods. In traditional models, most consumer transactions are free, with fees only applied when making larger transfers, and those fees are typically a percentage of the transaction amount. But with Bitcoin, the fees are based on the amount of data processed because transactions are verified by computers, and the amount of data involved in a transfer doesn't really change whether you're transferring 1 Bitcoin or 1,000 Bitcoin. For those of you who are curious about the details, Bitcoin transaction fees are currently measured in Satoshis, the smallest unit of Bitcoin. 1 Satoshi is equal to 1/100 millionth of a Bitcoin. And because Bitcoin transaction fees depend on the processing load and priority level of the transaction, if you want your transaction to be processed quicker, you can opt to pay a higher fee. This is where Bitcoin can either be advantageous or disadvantageous compared to traditional payment methods, depending on the transaction size. For example, if you're transferring a large amount of Bitcoin, say 1,000 Bitcoins, which at today's market value is about $80 million, the transaction fee would be minimal. However, if you're just using Bitcoin to make a small purchase, like buying a loaf of bread or a t-shirt, the transaction fee could actually end up being quite high. And in the context of using Bitcoin as a payment tool to replace cash or traditional payment methods, we can clearly see that Bitcoin doesn't quite measure up as a practical substitute. It's simply not efficient enough for everyday small purchases. Now, let's talk about value stability, a key factor in payment systems. Whether it's Bitcoin or any other type of currency, we need stability in the value of money, especially when it's used as an intermediary for trading goods or services. This is actually something the Vietnamese government has done really well in recent years. They've managed to keep the exchange rate between the Vietnamese dong and the US dollar quite stable over a long period of time, and that stability has played a huge role in boosting our trade and exports. But when we look at Bitcoin, you can see that its value fluctuations are huge. And this can cause big problems. Let's take an example. We can't very well sell a bowl of pho if, today, the price is $15, and then the next day it's $20. And just a few days later, it drops to $10. Imagine if every time we made a transaction, the value of the currency changed that drastically. And this issue isn't just about daily purchases. Even with longer-term transactions, like import-export contracts, which can span several months, the idea of using Bitcoin becomes even more impractical. The value volatility of Bitcoin makes it incredibly difficult to plan and execute these types of deals, because the agreed-upon price can fluctuate wildly during the contract's life cycle. Another factor to consider is acceptance. How widely is it actually accepted? Because of the reasons I've just mentioned, today, in most everyday transactions, there's almost nowhere that accepts Bitcoin as payment. Let's think about it for a second. Imagine you're traveling abroad, and you're holding Japanese yen or South Korean won. At least you can go to exchange points to convert them into the local currency. But with Bitcoin, finding a place to exchange it into regular money is already a huge challenge. And when it comes to paying directly with Bitcoin, the chances of finding a place that actually accepts it are practically zero. So far, we've only touched on a few key factors, like transaction time, transaction fees, stability, and market acceptance. I haven't even started discussing more complex issues like security and safety, which, ironically, are often touted as Bitcoin's biggest strengths, but also its biggest weaknesses, and I'll dive into those later. But just based on these 4 factors alone, we can already see that Bitcoin is far from ready to replace traditional fiat currency. In reality, Bitcoin supporters have long since abandoned the idea that Bitcoin will ever fully replace fiat currency as a daily payment tool. As people realized Bitcoin couldn't be used as money for everyday transactions, the goal of Bitcoin shifted. Instead of being a tool for payments, Bitcoin is now viewed as a store of value. And what do we hear the most often in this new vision? Bitcoin is the new gold, a safe haven asset for wealth preservation. The argument goes something like this: gold, in its essence, doesn't really have intrinsic value. It only holds value because it's limited in supply, and many people agree that it has value. Now let me set aside the fact that gold does have actual real-world applications. For example, gold is often used in electronics because of its low electrical resistance, making it essential for circuit boards and other electronic components. But for the sake of this discussion, let's just agree that gold doesn't have a practical application, and let's explore whether Bitcoin can truly replace gold as a store of value. First, and I think most importantly, is that a store of value must ensure stability in its value. The reason for this lies in the very nature of what we need a store of value for. When we seek to preserve the value of our assets, we don't want them to be affected too much by outside factors. We don't want inflation or economic fluctuations to have too much of an impact on the value of the assets we hold. That's why, whenever the economy seems to be facing instability, people often turn to gold as a safe haven. However, history has shown that Bitcoin does not meet the stability requirement. I probably don't need to offer proof of this, because the volatility of Bitcoin is already evident. Bitcoin has gone through countless cycles where its value has either dropped or skyrocketed by dozens of times. Whether it's an increase or decrease, it clearly shows that Bitcoin is not a stable asset. Yes, gold also experiences price fluctuations, but compared to the volatility of Bitcoin, those fluctuations are minimal. And importantly, the price changes in gold are largely the result of economic shifts. Like when there's uncertainty in the market, people flock to gold, driving up its price. In contrast, Bitcoin's price swings are driven by other factors, mainly fueled by market FOMO, fear of missing out, and speculative trends. Secondly, when we choose an asset for wealth preservation, we need it to have high liquidity and broad acceptance. With gold, it's been a universally accepted asset for thousands of years. But with Bitcoin, as you can probably tell, it's still very limited in terms of acceptance. In fact, the future of Bitcoin itself is still a big question mark. Some people believe in its future, while others are still skeptical. Now, imagine for a moment if I said, "I'm not sure if gold will still have value tomorrow." You'd probably call me crazy. But with Bitcoin, it's different. Even you sitting here listening to me right now, the fact that you're hearing me talk about these issues is actually proof of Bitcoin's uncertainty. And there's still another critical factor that makes me believe Bitcoin will have a tough time replacing gold, and that's security and anonymity. These are the features that many people praise about Bitcoin. But as I mentioned earlier, security is actually both Bitcoin's greatest strength and its biggest weakness. I'll save that point for later and dive deeper into it, but for now, let's pause on these points. So, based on everything we've talked about so far, it's pretty clear that Bitcoin struggles to be a viable replacement for gold as a store of value. When people discuss these points, they often bring up this argument: gold, while safe, doesn't have much potential for big price increases, whereas with Bitcoin, they believe it could rise to $100,000, $500,000, or even $1 million per Bitcoin in the future. But when they say that, they're actually misunderstanding the concept. Because at that point, they're no longer seeing Bitcoin as a store of value, they're seeing it as a speculative investment. When we look for a store of value, stability in price compared to other assets should be our number one priority. After that, we might look at potential for price appreciation, but if it does go up, it should be stable. If it's not stable, then it doesn't matter how much it increases in price. If it fluctuates wildly, it's not a store of value anymore. Once we start expecting it to increase in value significantly, we're no longer treating it as a safe asset, we're treating it as an investment tool. These two things are very different in nature, but many people tend to confuse them. Now let's shift our focus to Bitcoin as an investment. The most important reason why I don't see Bitcoin as a viable investment is because the Bitcoin market is still very loose in terms of regulation. First off, Bitcoin is a new asset, and lawmakers need time to research and build regulations around it. Second, because of its unique characteristics, especially its anonymity, managing Bitcoin becomes even more difficult. Third, Bitcoin's global nature creates challenges because it requires international agreements on policies, and each country has different monetary and tax regulations. When you put all these things together, you get a Bitcoin market that is like the Wild West of the old days, where the strong get richer, and the weak get left behind. And this has created a fertile ground for fraud. When we invest in the stock market, every company listed on the exchange has to be regulated by government bodies, and they have to follow strict rules. Any fraudulent activity or market manipulation will immediately trigger the intervention of regulatory agencies. For instance, do you remember when Elon Musk made some misleading statements that caused Tesla's stock price to surge? The SEC, Securities and Exchange Commission, immediately filed a lawsuit, and he was fined heavily. But the story with Elon Musk in the cryptocurrency world is a whole different story. He could pretty much do whatever he wanted without anyone stepping in. Personally, I admire Elon Musk in many ways, from his persistence in building Tesla to his groundbreaking work in SpaceX, which is pioneering in the aerospace industry, and countless other huge contributions to humanity. However, when he pumped up Bitcoin in 2021 and then shifted to Dogecoin, my view on him changed a bit. Honestly, in terms of making money, he was really sharp. He found a loophole, an area where the law hadn't caught up yet, and took full advantage of it to make a lot of money. From a business perspective, he's incredibly clever. But from an ethical standpoint, it's a bit questionable, especially when you think about all the people who followed his pumps and ended up losing a lot. And Musk's case is just one example among many. There have been other scandals, like the collapse of FTX or the more recent issues with Binance, that caused many people to lose their money. And that's not even mentioning the countless pump-and-dump schemes and fraudulent activities happening in the Wild West of crypto, where there are no real regulations in place. In my personal view, even if there is gold in a particular area, I'm not going to go digging in a place where I know the law doesn't exist, a place where the strong dominate and the weak get trampled. And especially when I know I'm not one of the strong in that kind of environment. So, based on everything I've just shared, Bitcoin can't replace fiat currency, it won't replace gold, it's not practical for everyday payments, it doesn't work as a reliable store of value, and it's definitely not a safe investment. I simply don't see a future for it. From my perspective, the people who are investing in Bitcoin right now are essentially just chasing a product that I don't believe has any real future. What they're doing is basically buying at price A, hoping someone else will buy it at price B so they can sell and make a profit. I often use a metaphor when explaining this to my students. Imagine someone finds a random stone on the street and tries to sell it to me for $1,000. Naturally, I wouldn't buy that stone. But I might buy it if I know that someone else right after me is willing to buy it for $1,200. And the person who buys it for $1,200 is also not buying it because the stone has any real value. They're buying it with the hope of selling it again to someone else for $1,500. This cycle continues, pushing the stone's price up, and eventually, someone will buy it for $10,000. But when there's no one else willing to buy it for $11,000, that last person is stuck holding an invaluable object priced at $10,000. This kind of situation has happened many times in history, and from my perspective, the story of Bitcoin and other cryptocurrencies is really just the same. It's a financial tool that doesn't work as a payment method, doesn't serve as a store of value, and has no real future development. The only reason people are buying and selling it is in the hope of selling it to someone else for a higher price later on. The common story being passed around is that Bitcoin will eventually rise to $100,000, $500,000, or even $1 million per Bitcoin, and that's when people will sell and get rich. But if you look deeper, this is actually a misunderstanding of what Bitcoin is. When people hope that Bitcoin will increase in value, they are no longer treating it as a store of value. They are treating it as a speculative investment. When you look for a store of value, price stability is the most important factor. Any price increase should be slow and steady, not wild and unpredictable. If we start expecting Bitcoin to go up dramatically in price, we're no longer thinking of it as a safe haven, we're seeing it as a gamble. Now, looking at all the points I've shared, I don't see a real future for Bitcoin. From my perspective, people investing in Bitcoin are essentially riding a wave, hoping to buy low and sell high to someone else down the line. underscore 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 underscore. Moving on. As I've gone over today, I believe there are many reasons why Bitcoin won't replace fiat currency, why it won't replace gold as a store of value, and why it's not a safe investment tool. With all these points in mind, we get a pretty clear picture of Bitcoin's future, or rather, its lack of future. But there's still one core element I've mentioned a few times, and many people bring it up to argue that it's Bitcoin's biggest strength: decentralization, security, and anonymity. These are the key features that many people believe make Bitcoin unique. But when you analyze them more deeply, you'll realize that these very qualities are also the main reason why I don't trust Bitcoin's long-term success. And this is what led me to my conclusion: I'm choosing to sit out on this game. But I'll dive deeper into this topic in the next episode. I'll explain why I believe Bitcoin, sooner or later, will have the same fate as that stone I just shared with you. Today's episode has already run long, so I'll wrap it up here. If you found this content useful, please share it with your friends and family. And as always, since YouTube's algorithm favors videos with more likes, please hit that like button if you enjoyed this podcast to help get the word out. You can also subscribe to the channel so that you get notified whenever I post new content. Thank you so much for tuning in, and I hope you have a peaceful evening ahead.